Hi everyone, George here with another video about tax knowledge. Before I start, the common disclaimer, this is not meant to be any form of tax advice or investment advice, certainly not. It's for instructional purposes only. This is the first video probably that I will show you without using a tax program, either a retail variety or a professional product. And what retail I mean by UFA. The reason being is because what I'd like to show you is a tax concept called average cost of shares. What does average cost of shares mean? What this means is that if you acquire the same security over a period of time and you do partial dispositions over a period of time, you're supposed to take the average cost of these shares. So this is more commonly referred to as the homework that you have to do before you actually begin your tax return. Now, in the previous video, I had actually showed you our professional tax program, DT Max, that actually has a worksheet in the advanced tools features that allows you to do this sort of calculation. Well, if you can't afford a high-end tax preparation program, then what is your alternative? Well, your alternative is like I said before, I hate to use a cliche, but it is do your homework, acquire that tax knowledge, and where you can start. A good starting point is the CRA Capital Gains Guide, the T4037. So on page 23 or 24, you have a sample calculation that you can base yourself on. Now, the calculation that I'm going to show you is a bit more complicated than that because it involves currency exchange. So as a hypothetical example, I'm using GE common shares, and here I have a little title, average cost 2019 to current year. So in this case, the investors started investing in GE back on the 27th of May 2020, bought 500 shares at $7.26 US. This is basically the number of shares times the price in US dollars. Then the Canadian cost is the US total cost multiplied by the exchange rate at the time of purchase. So that's the 27th, the 5th, 2020. And the average cost per share at this point, or the unit cost, is basically the Canadian cost multiplied by the number of shares, as you can see here. So we get $10.05 Canadian, or $7.29 US at that period of time, which is at that point in time, 27th of May 2020. He then reacquired another 500 shares on the 14th of August 2020 at $6.66 for a total cost of $3,330 US. And the exchange rate on the 14th of August 2020 was $1.33 or $1.32 and a half there. So again, when we multiply the total cost in US dollars and the exchange rate on the 14th of August 2020, you get another additional 500 shares costing you a total of $8.82 roughly per share. Now, you may be wondering, where did I come up with these numbers? Well, in terms of the cost per share, you can find that on your investment summaries. If for any reason you don't have your investment summary, you can always Google it. This is YouTube, but here's GE Finance. This is the historical cost of GE shares going back a period of time. So here you have General Electric, and you can readily find this information on the internet. It doesn't have to be you, it could be some other site that provides you this information. So you can readily find it on the internet for free. Now, the other thing I found is the exchange rates on the Bank of Canada daily exchanges rates lookup. So you can look up for a range and then download an XML table. Now that XML table, you can either download it into Excel and use the VLOOKUP function to find it, or what I did is I just downloaded it into Notepad and looked up the exchange rates manually. Yeah, it's cost-consuming, time-consuming, but there are shorter ways to do a VLOOKUP function and find it automatically using Excel. What's important here that I demonstrate effectively is doing the average cost. Now, what happens when you have a sale? Well, what happens when you have a sale? As you can see here, I sold 250. It's a partial disposition because I did not sell everything. So what happens when you do a sale is you take the sum of what you accumulated so far, which in this case, it's two lots of 500 shares, okay, if you can call them that. Then you add up the total cost here, and you add up the total cost in Canadian dollars. Now, you take the average cost again, which is basically your total cost divided by the total number of shares that you acquired. And then that will give you approximately $1,743.75 worth of shares disposed at this average price. So I sold 250 shares. Okay, my average cost is $9.34 Canadian. Here you go. Okay. And this is basically how I got this amount, is basically this divided by that multiplied by that. Okay. Now, my disposition, my proceeds of disposition in US dollars was, I sold these 250 shares at $6.38. Multiplied by 250, that's my proceeds of disposition in US dollars, POD. The exchange rate at the time that I sold the shares on 19th of August 2020 was 1.3171 for a total proceeds in Canadian dollars of $2,100.77. My ACB in US dollars was 1,743, or 2,375.77 converted into Canadian dollars. Again, this $2,358 is based on the total average cost of $9.44 Canadian multiplied by 250. I incurred $100 in commissions, and at the time of the sale, my exchange rate was $1.3171. So that actually adds up to $131.71 Canadian. So my loss actually in Canadian dollars is $389.70, not 248.75 in US dollars. I say not in $248.75 in US dollars because we cannot report US dollars on the Canadian return. We have to convert everything to Canadian dollars. And with disposition of common shares, you have to do the conversions at the time of purchasing and selling the shares. Now let's do a couple more acquisitions, okay? And let's look up the table here. Actually, here. Let's go look up a couple of dates in 2021, for example. All right. Here. Let's say on February 1st, 2021, I'm going to use the closing price as the purchase price of $10.74. Okay, let's say on February 1st, 2021, 1073. 1073. We bought back those shares of $250 on February what was the date again? February 1st. Yep. All right. 1st of February 2021. We bought another 250 shares equals this multiplied by the number of shares. Okay, and now we want to find our exchange rate on February 1st, 2021. Okay, did we go up? Let's go down. February 21st, the exchange rate now is $1.26.27. We can copy paste it into the Excel sheet right there. There you go. And now we'll just go like this and say this multiplied by the exchange rate. There you go. And now the new average cost, we should format this to do 2 decimal places. And this should be at least 4. Okay, cost per share is equal to my total cost Canadian divided by 250. There you go. And let's make one more acquisition, and then we'll do a manual disposition. Let's say in March, sometime in March, whoa, what the heck? Excuse my language. Here we go. Sometime in March, let's say March 3rd, I bought some more at $13.44. Okay, March 3rd, 2021, bought 300 shares at, what was the price again? $13.44. $13.44. Okay. Let's do a little multiplication. There you go. Okay, let's find out the foreign exchange rate on the 3rd of March 2021. So this is a good process or a good thing to do, a good practice to do while you are accumulating and selling shares throughout the year. Don't wait until March 31st of the following year in 2022 to do this for your tax return. Keep a record, do it as you go along. It'll save you time in the end. All right, $1.26.31. Stronger Canadian dollar. There you go. Now, let's say in 2021, we decided to sell some shares again. So what I have to do is do a total. So the total will be from my last balance to my latest acquisition. Let's put some in there. So as you can see, after my first disposition in 2020, which I would have declared on my 2020 tax return, I was left with 750 shares remaining. I reacquired 550, therefore I now have 1,300. Okay, and we said that disposition date was sometime in March. Yeah, it was on, yep. I forgot. Let's find a new disposition date. March 14th, March 4th, 2021, $13.56, okay? Let's do that. Okay. So now I have my total here. I also get a total here. Sum equals sum. This is the sum. There you go. And I can simply copy paste here. And now here we'll need to have the disposition in Canadian dollars, the average cost per unit. There you go. Okay, that works out to $11.97. All right, so now we have a sale on, we said March 4th, 2021. And we have disposed of 500 shares. So here, what we need to do is take this divided by the total cost, divided by the total units held, multiplied by the amount being sold. There you go. And here what we'll have is basically equal to 500 times the average cost of my shares, which is $11.97, which kind of makes sense. I put 500 instead of actually putting the cell. There we go. There you go. Okay. So how much was my disposition for? Let's go back. It was closing, we agreed was $13.57. So let's put here equals to 500 times $13.57. Okay. There you go. The exchange rate at that time on March 4th, 2021 I'm putting April. Good catch, George. Here you go, 3. And was I using the right date? Yeah, March is the 3rd month. Okay, great. So the exchange rate on March the 4th, there you go, $1.26.37. Control C, Control V, there you go. And the pod in proceeds of disposition in Canadian dollars is multiplied by that, $8,574.20. ACB in US dollars is simply that, and I'm going to multiply it by -1 to make it a positive number, so my equations work. ACB in Canadian dollars is this, and I'll multiply it again by -1 to make it into a positive number. There you go. Let's say I paid another $100 in commissions, and the exchange rate at the time of sale, there you go. And I can simply copy this, paste it there, and also copy this. And here what I'm doing is I am not mixing apples with apples or apples with oranges. I'm doing the US side separately from the Canadian side. Canadian proceeds of disposition minus the Canadian adjusted cost base minus my commissions paid in Canadian dollars. So ultimately this transaction right here is what I will report in UFile or DTMax or my other software. And if you had more than one sale in 2021, next year you would add up the proceeds and the adjusted cost base. Given that it's always GE shares, you add up the proceeds, you add up the adjusted cost base, you add up the total commissions, and you report it as one transaction. Okay, but what's important is that you figure out what you're left with at the end of your transaction history. So let's look at some. Now he started with 1,300. He sold 500, so you should be left with 800. And here we go. My new average cost per share is now $11.96. And let's do some formatting here. Okay. Let's put this to 4 significant digits. Let's see if we can do that. There you go. So this is the balance, and the process starts again if you should reacquire more shares. Now what I recommend doing is you can put one of these sheets per type of shares. So if you had another type of share, you'd follow the same example, but you put it in another sheet, each transaction separately. So what would happen if you had a 2-for-1 split? How would you report that? So basically, all a 2-for-1 split is the number of shares increases, okay? But the total cost remains the same. Your unit per cost should differ. So if my 300 shares become 600, I think this spreadsheet can account for it. Okay, 600. Okay, and it's now 6097. And if I went to the original, let's see. Oops. Let's go back to 600. Oh, I'm doing something incorrect there. Okay. So let's say we have a 2-for-1 exchange of shares. Okay. 2-for-1 split 2-for-1. Okay, so basically those 800 shares become 1,600 shares. The cost should remain the same. Okay. And now this makes sense. The unit cost will be halved. So 2-for-1 split, your number of shares double, and your price per share is halved. That makes sense. What I was doing before was something out in left field. Sorry, folks. I apologize for that. How about a consolidation of shares? So instead of having a 2-for-1 split, you have a 1-for-2 split. Let's change that around. Okay, so now your 800 shares become 400. So the number of shares changes, is divided by 2, but your cost per share is doubled by 2. So that's how you account for a split. And you can even record the date of the split here. Okay, hypothetically speaking, it's a hypothetical example. I don't think that GE shares had consolidated or expanded one way or another currently. So that's basically it. I wanted to talk a little bit about superficial losses. So basically what happens with superficial loss is that you reacquire the shares in less than 30 days after you disposed of them. And basically in that particular case, you're supposed to add whatever loss you incurred to the cost. And then as you dispose those securities, because your cost increases by the amount of loss you incurred, you'll decrease future capital gains. Now, how is that different from non-capital losses? Well, non-capital losses kind of work in this capital losses. Sorry, capital losses. So how does a superficial loss differ from a capital loss? Because technically, with a capital loss, you are able to use it against a capital gain. Well, how do superficial losses differ is that with a superficial loss, you can use it uniquely concerning the asset that you disposed. You cannot use it against any other capital gain. A little nuance there, I suppose, but one way or another, it evens out. It was a very complicated topic to explain. I hope I shed some clarity. If you are investing solely in Canadian securities, I think the capital gains guide has an immense amount of value in it in reading it. I am not sure how I can share this template with other people. If anybody knows, I'm willing to listen as to how I can do it. If you've seen any errors, feel free to comment. It's great to hear from you. That's pretty much it. I hope you enjoyed the video, and have a great summer, everyone. Take care.